Hello and welcome, dear traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is February 23 and we started from GBP-USD pair with Jakub Novak. But first, let's have a look on 5-minute time frame for analyzing yesterday's transactions. The test of 1.2119 occurred when the MACD line was far from zero, so there was no signal to buy. A similar scenario was seen at 1.2079. But this time, it was the downside potential that was limited. No other signals appeared for the rest of the day. There are no UK statistics scheduled to be released today, so market players have all their chances to continue the bullish scenario. But to do that, pound has to stay above 1.2050 for as long as possible in the morning. The speech of MPC member John Conliffe may also support dollar. However, traders must not rely on it too much. Quite a number of US statistics are coming out in the afternoon, but some could be bad for dollar, such as the GBP data for Q4 and the initial jobless claims, which are expected to show some growth. The speech of FOMC member Raphael Bostic is unlikely to lead to pressure on GBP-USD. For long positions, you can buy pound when the quote reaches 1.2085 and take profit at the price of 1.2131. Growth will be possible if there is a consolidation above 1.2085. However, when buying, make sure that the MACD line is above zero or is starting to rise from it. Pound can be bought at 1.2054, but the MACD line should be in an oversold area, as only by that will the market reverse to 1.2085 and 1.2131. For short positions, sell pound when the quote reached 1.2054. and take profit at the price of 1.2016. Pressure will return if the pair does not rise in the morning. However, when selling, make sure that the MACD line is below zero or is starting to move down from it. Pound can also be sold at 1.2085. But the MACD line should be in the overbought area, as only by that will the market reverse to 1.2054 and 1.2016. Here is another one trading plan for pound-dollar pair by Dimitris Tsoupas this time. Pound-dollar pair is trading below the 21 SMA and below the 200 EMA. We can see on the 1-hour chart that the British pound is trading within an uptrend channel formed since February 17 and below a downtrend channel formed since February 21. The US dollar index continues to rise. If the British pound fails to break the 1.2175 zone in the next few hours, we could expect a resumption of the bearish cycle. With a sharp break below the psychological level of 1.20, we could expect a drop towards the 2.8 Murray, located at 1.1962. Encouraging UK PMI data revive hawkish expectations from the Bank of England and boosted the sterling. In case GBP bulls continue to hold the price above 1.2085, it could reach 48 Murray at 1.2207. The trading plan for the next few hours is to buy the British pound above 1.2030 with targets at 1.2073 and 1.2090. Additionally, a break of the downtrend channel around 1.2090 will be signaled to buy with the target at 1.2207. Here is pivot levels as a lifestyle. Evangelos Paulakis would help us with the euro-dollar pair. Yesterday, Bears retested the low from the previous week, 1.0613, and closed the day below the monthly support of 1.0611. If they manage to hold at these levels, their next targets will be the weekly support of 1.0461 and 1.0416, the lower boundary of the daily Ichimoku cloud. A rebound from the level of 1.0611 will lead the pair to test the resistance of the short-term trend on the daily 1.0702 and weekly 1.0758 timeframes. On lower timeframes, bears are in control of the pair today. Their downward targets for today are found at the standard pivot levels of 1.0581, 1.0558, and 1.0516. At the moment, there is a slight upside correction on the chart, so the price is testing the central pivotal level of 1.0623. In the course of the correction, the price may head for 1.0646 and 1.0664 weekly long-term trend. Consolidation above 1.0664 and a reversal of the moving average will change the market balance. Other daily targets are found at 1.0688 and 1.0711. At the end of the roll, here's Lowry Bailey with USD GPY pair forecast. Let's have a look. Yesterday, the yen did not react much to the general strengthening trend of the US dollar. The USD GPY pair even fell by 10 points. Today is a national holiday in Japan, and the general uptrend, which was confirmed on Tuesday, may not be supported either. The signal line of the Marlin oscillator is decreasing on the daily chart, so there is a probability of a retest of the blue channel price line 133.82 before further growth to the upper line of the price channel to 137.70. On the 4-hour chart, the price remains in the ascending position, above both indicator lines. The risk of a corrective decline is created by the Mullen oscillator, which has been moving along the zero line since the 20th and is not growing. The MACD line, 134.38, is an obstacle to the deep correction, which coincides with yesterday's low. If the support remains unbroken, the pair's slow rise will continue. That's all for today. See you online soon. Good luck.